Hi, and welcome to another episode of the Innovation Conversation. Today we are joined by Anmol Goel. Anmol, welcome.
Thanks for having me, Ricardo. Really appreciate you.
It's a pleasure having you here. Anmol, would you like to introduce yourself to the audience, please?
Yeah, absolutely. So, in a few words, I am the owner of Gacs Limited, which is a tech venture builder. And our aim is to support startups from early stage all the way up to scaling stage, in more sort of venture terminology from early seed stage to Series B, helping them with their development, their scale up. So working with them on their sales, as well as focusing on their fundraising journey.
And I know you're quite a traveler, right? Because you have been to multiple countries, you go on multiple events as a speaker as well. So how did that whole thing came about?
Interestingly enough, so all the sort of the traveling journeys they've picked up since March, and
Hmm.
then that sort of was like my first big event in Ibiza. So people always, recently a lot of my friends have been noticing as well, and they're like, "Wow, overnight you've traveled out to 7, 8 locations." But it's a funny story that no one saw that for the last 18 months that
Yeah.
I was doing all the work in. I was putting out all the posts. I was doing all the sort of the groundwork, and then now, all of a sudden it's that overnight success. So it always makes me chuckle. But no, I tend to travel out for any sort of events where there's need to sort of speak regarding startups, regarding innovation, regarding acceleration programs. The first one in Ibiza that happened in March was the Ibiza Tech Forum.
Oh,
And the founder of the forum, he reached out to me because I would put out a lot of content regarding startups in terms of how they can reach to investors, how they can, effectively work on their product market fit, work on sort of their market journey, and then scale up. And he saw that I was providing a lot of value, and he thought, I should be an individual who should come and speak at the event, luckily. And from there, I met some of the other guys in the Spanish ecosystem, and then, some of the London guys saw that I was speaking at events in Spain and were like, hey, we know you're from London and you've been going to Spain, so you might as well come speak in London. And then from there, I sort of catapulted, speaking at a few more Spanish locations, and now been asked to, next sort of come to a few Latam countries as well.
okay. But do you speak Spanish or not really?
I can speak Spanish. Yeah, I wouldn't say I'm fluent, but I would say I'm 80-90%. I can pretty much understand everything.
Hmm.
Sometimes speaking, I'll be a bit hesitant when it's, the thing with Spanish is it's quite complicated sometimes, when you have to mix conditional with past preterite and all those sort of things.
Yeah.
So when it gets super, super complicated, I'm sometimes like, okay, well, what was the tense? I need to sort of figure it out in my head, but I can pretty much understand everything.
Okay, so this is actually quite interesting. So what do you think are the key differences between these two ecosystems, between the Spanish one and the UK one, for example?
Yeah. Yeah, I think the Spanish ecosystem is a lot more risk averse, which I guess, in my opinion, I quite like. So I've, recently,
Hmm.
been part of a couple syndicates, and sort of, we'll be opening our own fund, and I'm starting to look things more from a investor's perspective, as well as sort of a venture builder's perspective. And from an investor side, having as much traction and data behind is a good thing. So the one big thing is obviously that these financial investors don't like to take as much risk. But then on the other hand, then you see lack of innovation there.
Hmm.
You see London as a big sort of tech hub in terms of what's up and coming here, especially, the fintech market, in the sort of blockchain market, and overall sort of AI developments that are happening within London. In the big sort of hubs, which I would say is either Madrid or Barcelona, that's where most of the innovations happen in Spain, they're still quite lagging just because the
Hmm.
infrastructure and the risk appetite isn't there. But if you're a early stage investor and you want to invest in a startup, you'll get a much fairer valuation being in the
Hmm.
Spanish economy compared to the London
You
economy.
know, do you think it's hard to get started it's harder to get.
That's an interesting question. See, I guess in terms of starting out, you can start off in either markets. The biggest
Mhm.
issue with any startup is when they're starting out, they need to address what problem they're solving. So it doesn't really matter where you start. It's more in terms of applicability. I can start the same product in both economies, but I need to know who I'm targeting and what price I'm going into the market with,
Mhm.
and what my overall sort of landing strategy is. So I think that's a bit more important in either economies. Maybe I'll say there are a few more incentives in London to sort of push people to go into that entrepreneurial sort of journey and, figure out the ins and outs of it. And, the overall support system slightly bigger in terms of the events that will happen and the programs that are available. But I wouldn't say there's a massive difference if you want to get started in either economies.
So one thing, how did you get started in all this? What was your introduction to the startup ecosystem like?
Yeah. So mine was actually I know people always say I didn't mean to go here and I just landed in it, and it's a very cliche statement, but it genuinely truly is in my case. And so my background, my education background is in maths economics. So I was a valedictorian at the University of Liverpool studying there. And I've done sort of placements at Marsh McLennan in sort of terms of data analytics. And I think I've just done a short stint at JP Morgan in their M&A division, realized I didn't really want to go into IB. And I was coming back to Marsh McLennan within Marsh division, sort of coming back into the data and insurance role. And whilst I was doing that, I decided to take a couple months out and travel to South America. And whilst I was doing that, I think you know what Reddit is, right? The platform. Yeah, so I was on Reddit and I came across this guy's post on Reddit, it's some sort of e-commerce post asking about, look, I need help. I'm setting up a new store and, new company, and it'll be selling jewelry, but I have this, and this tech side of things, and I'm unsure about how to price. I'm unsure about, how to market. I'm unsure about sort of validation and a few other points. And, I'm just sitting in my hotel and I was like, I know these answers, from studies, from application, and, in sort of the small stints of work that I'd done at that time. And I was like, okay, cool. Well, I'll write out a response. And, I broke it down. I said, look, if you're considering price, you need to look at competitors. You need to look at the market, supply chain, product market fit. You probably need to do, maybe friends and family, and then in around, see what the response is, and a few other points regarding sort of marketing with low budget. And he said, wow, thank you. And, he went away, came back after a week and said, look, I applied all the sort of the things he said, and it was really, really helpful, got really good data. Can we get on a call next week and, discuss? I would love to sort of have you on board. And I was like, yeah, sure. Thinking nothing of it. And then his next message was, okay, cool. How much you charge? I was like, charge? Interesting. I've never been asked this before. And I was like, I really just don't know what to say. So, I went on Google. I was like, how much do consultants charge? And I looked at, the job rate of it to like $40 an hour. I was like, $40 an hour? And he was like, cool, can I book you in for 5 hours? And I was like, sure. And, 2 years ago, out of nowhere, that's sort of how the journey began. And by that time, I sort of was doing freelance consulting on the side whilst I was doing my roles at Marsh McLennan, so within Marsh and then Mercer, moving into sort of the wealth management sides of things and understanding the larger deals on the mutual funds, pension funds, and all those risk appetite sides of things. And then as the consulting sides of things, grew from 1 to 5 to 10, I realized I enjoyed that a bit more. I liked sort of being, rolling my sleeves up and being in that startup ecosystem a lot more. Decided to, invest into myself, into courses, into mentors, and then, went all in.
It's a great start, and it's actually funny because you started off in Reddit, which most people use for, I don't know, commenting on politics and football and stuff like that, right?
Exactly. Yeah. So funnily enough, my first 3 clients were from Reddit. So, I mean, I've never used it, sort of after that, just because, it was very, very small ticket. But hey, if it's not working out for you on LinkedIn, maybe B2B, try Reddit, it could work out. There's a lot of cool forums out there.
Talking about a good product market fit, right? Because you literally found
Yeah. I think part of it is where a lot of people, and just as sort of a pointer, where a lot of people sort of miss out is providing value first, and I sort of still try to do that now. And that's something I picked up from Alex Hormozy was, too many people are too eager and too early to just go out there and go all sales mode, right? And start pitching you something and start selling you something. But that's sort of never been my focus, never then, never now. And I know that if I could provide enough value, people will just come back to me. because I'll always keep a gateway open that there are ways to reach out to me, whether that be through LinkedIn or emails or whatever. Everything is readily available. But if I need to give that value for them to come reach out to me, because that's always a much stronger lead, and people will stay for much longer. Whereas if you are successful in really sort of being that pushy salesman and you close them, the chances are they won't last. So I always prefer to sort of give value first, give them something for free, give them example of what I can possibly do for them, and then make them come to me.
Seeing Sir Mosey is the guy who does gyms, right? And he always has the thing on his nose.
Yeah.
Right? Fun fact about him, he was actually sued by a gym owner who said he was stealing his content and in using it. Then, funny enough, Alex actually went back to this guy and said, actually, you stole my content, and now you're suing me for using my content that's been on the web for ages now. So obviously the guy quit his lawsuit against him because it was like, oh. So it just goes to show how important it is to add value to people before you even start charging them for it, isn't it?
Yeah, exactly.
So you mentioned adding value. What about, you're looking at startups. Can you pinpoint some of the red flags they always have? Can you just, from the get-go, say, I don't think this is going to be successful because of A, B, and C? And if so, what do they look like? What are these red flags?
I think in terms of due diligence, there's really sort of 4 key things that we look out for. The first thing primarily is product, in terms of, how good your product market fit is, and what problem your product itself is solving. And if you've created a chair that is 1% more comfier than what already exists, then you're not really moving the needle. And in terms of how it sort of fits into the wider market and what the demand for it is, right? Maybe you can create a really, really super tech product, but if it's only solving a problem for 5 people, then again the volume really isn't there for an early investor to come in. And the second thing we then look at, and is a bit of a red flag, is market sizing. So calculations of CAM Samsung is, it's a very interesting topic, which is a lot of people don't know how to calculate it, and they try and calculate it, and it's a bit of a it's a bit of a rigorous task to begin with, figuring out what your total addressable market, then your serviceable market, and then your obtainable market is. And people always, they misconstrue what obtainable actually is. But, that's the second sort of part where they don't really understand their market. They don't understand who their competition is. And this is one of the sort of the most occurring lines I've seen investors say is, and I'll give advice to any of the startups that watch this, is never ever say you don't have any competitors. You're never the first person to think of the idea. Maybe something exact into the market doesn't really exist. Most likely probably does, but even if it doesn't, you'll still have vertical and horizontal competition. The investor needs to know what's already existing in the market, and they need to better understand that market, and they need to know that you understand that market. So in the future, whether you want to expand horizontally or vertically, you'll be able to. So that's the second thing. Then the third thing is financials, and founders who are slightly incompetent of understanding what the valuation of the company is. One of the things we're seeing a lot in the US domiciled companies is, these valuations of 10, 15, 20 million with nothing built. And, just an idea. And ideas are great. I love ideas. I love sort of doing idea brainstorming sessions with my team partners and so on and so forth. But ideas aren't really worth anything themselves. It's the execution. So without the execution, putting such high and immense value onto something, and, most investors will just, pass it off. So that's the third thing. And then the fourth thing is what we look at is the team itself. What's the background of the team? What have the team achieved so far? Why are they the right fit? So if so you said red flag. So, if a team comes to me and say, look, we're creating a cyber tech startup, but, none of them have a background. They were taxi drivers and, restaurant owners are like, well, how are you starting? What is your competency? So you need to show that competency there as well. So I think those 4 things are the main things we look at it from a due diligence perspective when we're working on the investor side, to ensure and any red flags are mitigated.
Do you think, I've read 2 things, complete opposite news. One said that investment has gone down. The other one actually said investment has actually gone up. So what do you think the investment market looks right now? Because I talk to many founders, some say it's really, really hard, where other people say, actually, no, it's never been better. And if you look at the stats, actually, people are actually putting a lot of money back in. So what
Yeah.
does it look like for you? What's your perspective on this?
Yeah, I guess neither are wrong. It just depends on when you compare it to. So
Mm,
if you compare it to, peak of 2021, yes, peak of 2022, end of 2021, yes, investment has gone down. But if you compare it to Q4 last year, yes, investment has gone up.
yes.
So it's your comparison scale in terms of what period in time you're comparing it to. In terms of now, I think we hit a slump, and we're just coming back in that period now where money is starting to flow in. So Carter does really good reports in terms of the stats on pre-seed, seed stage, Series A,
Mhm.
Series B stages funding, and Q2, which recently just finished, had very minimal incremental increase. I think the average increase was around 1 to 2% from the previous quarter. So yeah, the investment landscape is sort of coming back to what normality was, but so many people came into the entrepreneurial world during or sort of post the pandemic crash,
Well,
and their understanding of what the market is completely flawed. They thought that coming into 2021, 2022, early 2022, when everyone had money, that they'll think of something and they'll go to the investor. Investor's gonna go, here's the money, here's 500 grand, and you take it, you go invest. But that's not really the reality. And now we're coming back. We had the crash, and it's coming back into market correction phase, where good ideas are now being funded again. Investors are starting to sort of take risks, and the previous investments are now showing exits. So it's coming to that correction phase where probably towards the end of the year or early 2025, we'll see it being, but maybe not at the peak, but again, sort of on a horizontal or, vertical incline of some sorts.
interesting, because I think you're the first person who actually has done such a complete analysis of the way the market works, and also
Yeah.
perspective on the market. Quite interesting. What do you think? So I know you do deals in multiple countries and continents, right? We were actually talking before that the only two places you haven't done is Antarctica, and where's the other one? Was it
Africa,
Africa?
yeah. Yeah.
Africa. So one will be easier than the other, I'm assuming. What do you think is it harder to raise in Europe than it is, for example, in US? Or is it harder to raise in Asia? How does that actually compare? Even Latam, to be honest. I don't know much about
Yeah.
Latam, so how do they compare?
Yeah. Um, in terms of ease of raising, I guess it all sort of depends on competition, right? So the US market makes up roughly 51% of global venture market, like venture and micro
Mhm.
PE market. So all of the sort of the inflow and the money and the deals that are happening in the US alone, rest of the world makes up that much.
Yeah.
So when sometimes people talk about ease, they think, oh well, it'll be so easy. But then you also have to look at the number of startups in the same economy.
Hmm.
Because just because there's cash, it doesn't mean it's easy, because then you have to compare it to the volume to make it easy for people. Like if $100 is being invested, but there's also 100 people, each person is only really getting $1. But then, in Spain, if there's $10 being invested, but there's only 5 people, actually everyone's getting $2. And, it's
Yeah.
maybe easier because there's less people fighting for that. So yeah, from that perspective, I would say US is a very attractive market, especially on the tech, and it rewards people for taking risk. And as long as, you are credible, you've done something, and what you have made is innovative and better for the world, you should be able to get investment. And in terms of the European market is, I wouldn't put it as European market as a whole, because
Mhm.
London operates very differently to Berlin, which operates very differently to Madrid, which operates very differently to, maybe somewhere like Kiev and now, and, somewhere maybe like Warsaw. So these different economies, and maybe Lisbon yourself. I mean, Lisbon is doing quite well,
Mhm.
as you know. So even these sort of different economies in Europe sort of play a different part, and I wouldn't really be able to put them together just because of their different mindsets.
Yeah.
So there's part of sort of Western economy, London being sort of at the peak, where they're able to take more risk and are more rewarding, but again, the same volume of guys, who are sort of going into it, where the other markets are risk averse. But in terms of how easy it is to raise, it's not that easy to raise an Eastern European economy unless you are a exited founder or you have a really, really solid proposition
Yeah.
And that is getting backed again sort of by a angel or a known VC. And
Yeah.
then off the back of that, you see a lot of guys coming in. The interesting thing about the Asian and Latam economies are they're growing, and a lot of governments are putting a lot of money behind it. As plans in India, for example. So I know the Indian economy fairly well. With the Gujarat, there's a state in India. There's a lot of government investment. They've put in very similar to Dubai, where there's this zero corporate tax area, and they're inviting sort of companies to come in. It's still rather larger. I think it's 4 companies who are making more than 50 million in revenue, but that's sort of a way to sort of bring in these SMEs or MSMEs. So those sort of countries, they're investing a lot, even publicly and privately, into their infrastructure. And same with Latam. Mexico is doing really, really well. As well as Colombia. I know Mexico is Central America before people, come to me. They're like,
Yeah.
South America, but like I still count it as that, part of LATAM. It's
Yeah.
very different to the US economy. But Mexico is doing really well. Colombia is doing really well. Brazil always has been doing well. And now, the other Spanish-speaking countries around it are trying to sort of play catch-up. But it's in those 2 geographies, it's the involvement from the public sector and actively opening incubation centers, as well as giving out more subsidies, giving out more grants, giving out more opportunities. It's shaping the landscape in a very very well manner.
When you talk with all these investors, do they ever wary of having started doing business in other countries or other regions because of the legal system, for example? And some people might say, you know what, I get the UK legal system, but if I move over, let's take Spain as an example, I don't actually understand how it fully works, so I'm not willing to put my money there because I might get hurt. Does that ever happen?
Yeah, no, definitely. There are a lot of investors who are like, I'm UK through and through, or I'm Spain through and through. Most of the time, you wouldn't see small ticket angels, and when I mean small ticket, anyone investing between sort of 25 to 100K themselves, taking those big risks, unless the company itself has a subsidiary in the other geography. So I know some Spanish companies who have an office in England and then have an office in Spain. And the investor will say, cool, because you have an office here, you're part English, part Spanish, I'll sort of jump on board. But I could completely understand that because, it's a different language, it's different sort of judicial system. Spain is, like I sort of said, regulatory quite tight in terms of how you can set up your accounts, how you can set up laws, restrictions, tighter compared to the UK anyways. So, there is the habit of it. And if the investor in the UK doesn't speak Spanish, then there's also that aspect of it. And on the earlier side, and this is what I sort of tend to focus on now for being in syndicates, is what value can I add if I couldn't add anything monetarily? And that's the biggest thing I think about, because cool, you might get 50K, 60K, 100K, whatever, but if I can make those right connections, if I can put the right system, the right tools in place, that should be ideally worth a lot more than the money, because the money will, in the startup ecosystem, 50K, 100K is not a big check. Like, some companies will blow that within 2 months. Right. So from an investor's perspective, they need to focus more on what connections can we make and what we can do for the startup, which is going to be worth a lot more than just the cash they put in. And if that isn't something they can, I would personally not go into that deal very early on if you're a business angel. If you are obviously the super angel with hundreds of millions behind your back and, you don't mind, then that's fair enough. But if you're sort of an earlier angel and you're sort of looking to go into a different geography, understand the culture, understand what you can bring to the table, understand what you can do aside from your money. And if you can't, if those don't add up, if 2 and 2 doesn't equal 4 there, then I would.
You mentioned syndicates, so I know you're part of a couple. Can you tell the audience how does that actually work? And most importantly, should they just reach out to someone in the syndicate saying, "Hey, can I get some money?" Does it actually work?
Yeah. So syndication is I guess it's a bunch of angels, also people with money coming together and saying, "Look, we'll invest in the group." Usually, how the main differentiation between a fund and a syndication looks like is, with funds, there's an LP and a GP structure. So the limited partner and a general partner. And limited partners, they will put money into a pot just visualizing it as in a pot, and a general partner will have, in very layman's terms, the ability to just spend the money as has been agreed as part of the contract of them signing in. So the money is a bit more readily available, when the startup goes through the due diligence process, and it's, cleared all the sort of the challenges and due diligences, and it meets all the criterias. The fund manager can just say, look, cool, you fit, here's a check for 200,000. It's a bit different in syndicates where there's groups of angels in a syndicate. Not everyone will come in on a deal. It's very much on case by case basis. So once the syndicate lead brings in a startup or a project, we will come in and discuss, okay, well, this is a startup. This is how much allocation we have. Who's it in? More so kind of thing. And, people can then put in, let's say 10 investors put in 20 grand checks out of 100 investors, and they'll come in. And what's set up is called an SPV, which is a special purpose vehicle. And using that, we will fund the round. So we will sit on the cap table as a SPV, which is sort of an entity itself, and that will sort of carry it. So that's the sort of the main difference. Sometimes the good thing with the syndicates is it's a lot more quicker in terms of hearing the yes or no. VC, they have to go through the committee. I mean, there is also an investment committee in the syndicate, but in VC is a lot more sort of formalized. So you have to wait for their decision. You have to go through multiple rounds of due diligences, and then once it's cleared, then processing and getting money into the bank, it sometimes can take 3, 4, 5 months. Whereas syndicates are a lot more sort of quick moving, where they're like yay, nay, in, out, cool, this is the amount of allocation we can do, 5 people in, money out. And it's that part of it. But then it's also, you don't know how much money you're going to be getting with the syndicate, because, in one deal, a lot of people might come in, and in another, not many, many might pull out. So I think those are sort of the key differences between a syndicate and a regular fund that most people know of.
And how do you approach them? Because I'm assuming you can't really approach them in the same way, especially a syndicate when it has so many decision makers, where I guess an investment fund will have just one, and you kind of know, okay, here's the GP, let me go and introduce myself. So you even get started with all this.
Yeah. I think in any ways, the best way to sort of approach someone is in person or through a contact. I mean, look, we all get, spammed on LinkedIn with pitch decks, and then, people sort of doing that. So I would say definitely don't do that. I'll say that's what not to do. The first message from you I don't want to see is, hey, my name is Bob, and, this is my startup. This is what I'm raising. And I'm like, oh, man, pretend, we're meeting in public, right? You're not just going to go try and sell me everything the first time you meet someone. You just give them bad taste. So I would say ideally, if you can go through either someone, so for example, if I'm in that syndicate and, a startup who might be a fit, so they might come through you and say, hey, Ricardo, I know you know Anmol. Can you please have a chat with him and see if he's open to an email exchange? I really want to talk to him about X, Y, and Z. That's a great way. Or, I go to a lot of events, a lot of times that's maybe once a week in some cases. So you'll see me there. Come up to me then, because at that point I'm ready to be pitched, because I'm going to an event, especially if it's a networking event about startups, about investment. At that point, I'm expected to be pitched. So at that point, you can sort of come to me and say, look, this is what we're doing. Can we be approached? There are ways to do it on LinkedIn, and our syndicates, and then I know a lot of them as well. They just have a link underneath, so it's very similar to a lot of VCs have as well. You can fill the form, you can put your sort of name in, and tell us a bit about your startup, and if we think it's a fit and we like it, we'll reach out. So that sort of standard form filling procedure exists with everyone. So if they want to reach out to us through that, they can do that as well. Even on LinkedIn, there's a way to build a relationship. Offer something of value, offer something of diligence that we would be interested in. And then through that, if we're on a call and, later down the line, you're like, hey, look, this is the idea. I'm working on this, what I've developed. Do you mind talking to your syndicate partners regarding this? And then, the person will be like, yeah, cool one.
Actually, you touched upon this topic twice, which I find quite interesting, because that's something I try to do. Doesn't mean it always works or it always pays out, but I think we end up doing it regardless, which is offer value before you even start asking for anything in return, right? And if people see it as valuable, they will give you something in return. If they don't see it as valuable, you're just being a nice guy, you help out a couple of people, right? It doesn't hurt to do it anyways, right?
Exactly.
So but it's how do you how do you stop as an individual and say, I've offered too much free value, it's time for me to start charging for the value I offered? So when do you actually make that decision?
Yeah, I think it's interesting and it's different for each person. Their sort of threshold. And for me, when things really changed for me was when I realized I could offer things that are of value, which my competition charges for, and
Hmm.
still be fine with it. So one of the things that I did, and I can talk from my perspective here, in Venture Builder, one of the things, like I said, we do is helping startups fundraise, right? And one of the things with fundraisers, you need lists of investors, you need their details, you need to know where the investors base, how much they invest, so you can sort of figure out, and then their past investment, so you can figure out, okay, who can I reach to, where can I make the connection, how do I sort of start, nurturing that relationship. And a lot of consultants or a lot of sort of agencies or a lot of sort of brands, they will charge for those mega lists.
Hmm.
And fairly so, I don't have any issue with. I mean, if they've spent the time in creating that list and they want to charge $500-$600 for it, fair enough. Um, but I realized, these lists were super super popular. They were getting thousands of comments and likes,
Yeah.
and people would be interested in buying it. A lot would buy it, and I was like, and again, I listened to Alex already, and I was like, what if I give this for free? What if one of the biggest things my
Mm.
competition does? What if I do that for free? How would that look like? And that's when things really sort of change, and people are like, how the hell is he offering? And I would really just buy out these lists for $300-$400, or spend a lot of money on software and curate these lists, and I would like have it for free.
Yeah.
And people were like, what is he doing? I had a few messages from a few guys who like, I think this guy who was selling about 2,500 investor list, and I think I purchased it for about, can't remember the exact price, I think it was $400 or $500. And
Mhm.
his list, I took it and I just put it on LinkedIn for free. He's like, you can't do that. I was like, why can't I? I've bought the list.
Yeah.
And I can do whatever the hell I want with the list now. Yeah, but you're giving it for free. Like, at least put something on it. I was like, well, I didn't wish to. And for
Mm.
me, that was enough value giving out for free, whereas for him it wasn't. But that's
Yeah.
sort of what I mentioned about threshold. But for me, it was like, I could spend the same amount on ads and not get enough conversion. So for me, it was okay to give out all of that value and not get anything back. I was already fine with that level
Mhm.
because at that early sort of stage, I wasn't growing. It was very sort of slow, minimal growth. So I was okay with that. So finding out this new technique was very much like, if it works, awesome. If it doesn't work, that's fine. I'm okay with that threshold. And so you need to sort of set up that perception and that threshold of like, okay, how much am I okay with? Am I okay with speaking to someone completely and them not being able to repay me in any sort of way, or do I,
Sure.
want to safeguard something? You need to set that barrier for yourself. And I think as you grow, as you get bigger and bigger, that threshold gets higher and higher. So,
Yeah.
maybe 2 years ago when I was starting, I would never been able to do it. One, because it was expensive, and second, I was like, I don't have that much value to give as an individual or as a company, so
Mhm.
I need to hold off as much information. But now I'm like, fine, even if they don't come to me, that's okay. I've still given them something, that is of value.
Yeah. Fair.
So I would say that level changes there. And in terms of what else they can do to figure out where that level is, look at what the competition is doing, right? And just
Mm.
be that one step ahead. Because, the competition might be doing 99, and there's this funny calculation in maths, it's like 1 times 0.99 will always be less than 1. But, if you can go
Mhm.
to 1 times, just over that, or 101, it'll incrementally go so much higher. So
Mm.
just try and make that threshold a little bit ahead of what the existence is.
Interesting. It's funny you mentioned investor lists, and I think a lot of startups are always looking at, "Ooh, how do I find this email and that email?" But the reality is, it's not hard to find the emails.
No,
It's
not at
it's
all.
hard to engage in a proper conversation with
Yeah,
people. That's what I found. Because you can send them everyone, like, you can send 25,000 cold emails. That doesn't mean they're gonna invest in you.
yeah,
But if you take your time to actually say, you know what, I got this email, let me go and see what this person invests in, and
yeah,
actually make a nice conversation afterwards, then
hmm
you're much more likely to have
yeah,
some money coming out. Yeah.
yeah. Exactly.
Oh, you mentioned, Alex. I'm curious on what mentors you have. Like, who do you look up for or out for? And who are your mentors?
Mhm. Yeah, so I used to have a mentor about 2 years ago, and he was a gentleman based out of the US. He sort of ran a few recruitment and tax agencies and done well in business, but he wasn't really on the tech side, sort of startup
Hmm.
side, but he'd done really, really well, 8 figure plus. And I spoke to him in my early sort of days, and whilst I stayed in US for a month or so, understanding a bit more about the basics of business. In terms of now, I don't have any mentors currently, but I think Alex is one that I look up to quite a lot, just because
Hmm.
again, he just gives out so much value for free, and so much of his principles come from this is what I did, and this is what you can take away from that, and I like that perspective because it's not that you should do this. Well, why should I? Because
Hmm.
that's what people, think where, when someone's telling them to do something, it's like, but when it comes from the perspective of this is what I did and this was the result, it's a lot more trusting and comforting in the fact that a person is telling from their own perspective and these are the results he got himself. So he doesn't need to make something up. People can see all of the accounts. He's very transparent. And there's a lot of sort of stuff that, he's applied, whether that's worked or hasn't worked. So he's one individual I look up a lot to. And Cody
Hmm.
Sanchez is another one, where,
Yeah.
she started off quite small, and now has brought up a very reputable brand, of buying and selling businesses and sort of PE activities and venture activities. And there's other sort of few individuals, whose newsletters and stuff I would read and sort of try stay up to date with. But those two are sort of big, and because now I'm sort of focusing a lot on branding side of things as well as the individual. Anmol itself rather than just Gacs. I'm trying to not separate it, but I
Hmm.
understand that Gacs is a part of me, but not me on its own. So I'm
Yeah.
focusing on that aspect, and these two guys have done that really, really well. So those two are probably the one that I look up to the most.
I completely get the personal branding because I'm incredibly shy, as you probably noticed by now. But fun thing is, most of the things I do, people don't realize it's me doing them. So I go and
Mhm.
introduce myself. For example, my events. I go, "Hey, I'm Ricardo. I'm one of the organizers here." And like, so you ran this? Yes, that's literally, it's my company. Me and mine's and Harry's. They'll be, oh, I had no idea who you guys were, because both of us never do any proper branding, and I think
Yeah.
that's something definitely to start working on. Is like how to sell myself a little bit better online, because it's always a fine line between you sounding incredibly cocky and arrogant and
Mhm.
you realizing you're doing it to just say, you know what, I just want to share the world to the world who I am, right? So
Yeah.
it's a tricky exercise.
Yeah, no, absolutely, and I guess for some people they don't want to do it, and that's completely fine. There's those people who are very happy just working from the shadows, and it
Hmm.
it works for them, and that's great. But for me, I realized I wanted to be more than just a owner of a company, and I
Yeah.
wanted to sort of be known as that young entrepreneur who's doing something, different, who's sort of stirring and making waves, and I realized I couldn't do that just as the CEO and founder of Gacs. I had to do that as Anmol.
Hmm.
And part of that is, building up that brand. And, I'm still very early days. And, I'm not a big social media guy. So I had to sort of bring someone in. And even though I'm young, I still feel like a boomer. I'm always asking questions like, how do you do this on Instagram? What does this mean? What do you do, on TikTok? So yeah, I'm still figuring that part out.
Like, I feel your pain. Like my Instagram etiquette, I always double check. Like, is it okay for me to follow someone if I just met them? Is that all right? Oh, even though I've been to their house multiple times and they've been to my house multiple times, is it still okay for me to follow them on Instagram? And be like, yes, of course, it's perfectly normal. Oh, okay, all right. I thought you need to be really, really close friends. So it's stuff like that I really struggle with. But yeah,
Yeah.
so one very interesting question, at least for me, is what is the latest book you've read?
Interesting. The most recent one I think was Atomic Habits. I'm not done with it, and I've just started it. I'm one of those people who don't read, who like to listen to books.
I'm the
Just
same
because
way.
I'm too ADHD to just sit down and read. So there's this app called Audible. I'm sure
Mhm.
you already know.
Yeah, Bill.
Which you can just put in and listen to books. So anytime. I'm on the way to the gym, or I'm on the tube, or I'm traveling somewhere, I'm in the plane or something, I'll just put that in. I'll just listen to it. And you can save like notes on it. So like little, chunks of voice clips where it says a sentence, which is really, really good. So one is Atomic Habit. And the last one, I was reading, which one was it? I think it was 48 Laws of Power or something. I can't remember the
Yeah,
exact name of it. Yeah.
by Robert Greene. Yeah,
Yeah. So that was those two are the sort of the most recent reads or listens, I would say.
interesting. Anmol, if people want to reach out to you, how can they do so?
Yeah. I would say the easiest way is LinkedIn. Reach out to me through that. That's my name's Anmol Goel. So if, they want to sort of put that in and my face and reach out through that, connect with me. I'm quite active there. Or if you see me at an event, feel free to come in person, talk to me about yourself. Maybe Instagram as well. I'm now trying to build that brand, so maybe you guys sort of can be the first ones who start reaching out to me through that. I'm still very early days with it, and that's the Anmol.oil. So if you want to reach out there as well, you can do that.
All right, definitely. Anmol, thank you so much for your time. I really enjoyed our conversation.
I appreciate you. Thanks for having me.
Thank you. All right.